Okay, good morning, everyone, and welcome to this intraday strategy session on SB Trade Desk. Good morning, everyone in the room. Mark, Steven, Kyle, Raj, Shafiq, Tom, Ty. It's always great to see you guys. So we are just a couple of seconds ahead of the release of Canadian GDP for the month of April. We're looking for a print of 0.1%. It's an upbuild from the negative 0.2 we previously got year on year, expected to hold at 1.5. And survey says negative 0.1. We see a hold on the month-on-month, year-on-year, also softer than expected. Here's dollar CAD reversing. So, guys, yesterday's intraday setup did have a dollar CAD chart. We're looking for near-term resistance, or I think it was on the here it is. We're broadly looking for resistance right around this region right here. 124.60 is what I'd be willing to start looking at short exposure. You have the upper median line parallel in there. It's also a 764 retracement from the decline off the highs that we made for the month. And sort of would be where I'd start to look for some initial support here on dollar CAD. So, or some initial resistance rather for a nice short entry. So I don't necessarily have any plays right here on dollar CAD on this print so far. Here's the 5-minute chart looks like on dollar CAD. Obviously a very strong reaction here on the 5. Again, session highs for Asia don't come in until about 24.25, so we'll see if that is able to make it up there. But broadly still looking the same in dollar CAD. We looked at this yesterday. Here's what the daily chart looks like. We're basically testing this trend line, which extends off the highs for the year, specifically the two highs that we made back in March. You can see on a closed basis, it's actually been pretty solid resistance at this point. So again, coming into view here, you could get that push into 24.60, and we'll be looking for possible short exposure there, short triggers while in that region. So we'll see if we can get a climb higher here in U.S. trade. So again, a little bit weaker than expected on both those prints for Canada. Here's the relative performance looks like on the greenback so far for the session. You can see Aussie stronger at 0.12%, still like the upside there. Yen stronger by 0.08. We're currently holding a short on that. Kiwi, biggest loser on the session, down 1.34%. So the Kiwi route continues. We'll take a look at that in a little bit as well. British pound has been lackluster. Euro trading slightly to the downside, 0.44%. We look at the equity markets after yesterday's strong sell-off. Here's what we're looking at. So mixed performance in Europe. CAC is pretty much flat in the session. Same thing on the DAX, slight advance of 0.07%. You can see we were deeper red in the earlier in the session, just popping into positive territory. So a little bit of a lackluster performance in overall risk assets. If you do look at the headlines, obviously we're not going to get that payment from Greece today, so that's sort of not a news event to trade, guys. I'm sure you're going to hear a lot of that on TV today. The focus really shifts to the referendum. And there's actually been some commentary coming out from some officials that even if a no vote is made in the referendum, that they'll likely still be in the euro. So look, it's a new precedent. We've never had this scenario. It would go against completely the commentary that we've heard from all the ECB officials that the euro is irreversible and whatnot. And we'll see if this decoupling actually does happen. All right, let's jump into price action. Any questions on the dollar CAD? This one's still a wait and see for me. Not really interested in the long side of the trade just yet. Even though we got this weaker print here, we'll see if we can get some resistance a little bit higher up. So we'll leave this on the radar for now on dollar CAD. Any questions on dollar CAD before we move on? All right, so jumping into the intraday page. Do want to just take a quick moment, guys, for some housekeeping here. There's been a change in how we're formatting the intraday page. I thought this was going to be a lot more beneficial for you, so your feedback is going to be paramount here. I'm always appreciative of any feedback that you do have, but basically the intraday trades will be posted on a post every day as opposed to just being here on the page. So each intraday update for the day, obviously price actions for the next day's price action will be here on the intraday page right under latest setups. You can also click on this latest scalp setup page, and this will take you to the archives of all the previous intraday updates as well as the webinars. So in this way, it's a little bit easier. You can actually see each comment right under its chart. The charts won't be deleted, so you'll be able to archive those and see how that played out. And it allows us to give out a lot more setups throughout the week instead of having to follow just the 2 or 3 that were on the intraday page. Now we can be a little bit more flexible and shift our attention to what's moving. So again, your comments and feedback will be great. I do want to note that on the intraday page, these are where the radar charts used to be at the bottom. So these are the charts that may not be in play just yet, but will be stuff that will be in focus moving forward. So here's dollar CAD. And again, this was yesterday's setup, waiting for that resistance from near 124.60 or so, the upper median line parallel. Also had an interesting chart on this yesterday for the SPX, which came into support yesterday on that massive sell-off. So again, you're looking at a 50% retracement of the 2015 range. Okay, so the entire yearly range, 50% retracement comes in at 2056. You have the 200-day moving average, which is at 2056. And then you have the median line coming off the lows there, which is also confluence in that region. Resistance up at 2088. Okay. And that's basically the high close for 2014, okay, that we made back in December. You also have the median line off the highs in that region. That's going to be the near-term resistance for the SPX. So if we take a quick segue and look at what that's doing, you're seeing a little bit of rebound off this region now. Okay, as long as you hold 2088, you really don't want to get too aggressive on the bullish side of stocks. Remember, this move that we made yesterday, although it's very late in the month, did break, finally, the monthly opening range. So we are at risk here. Obviously, the headlines are going to be driving things, so if you do get some sort of surprise reaction that's positive or interpreted as positive, look for that break. That being said, 2088 near-term resistance, a break below 2056. The key 618 comes awfully close to those March lows. And that's right around 2037, 2040. This is really the last-ditch effort, guys. If we get back below this, you're looking at a much steeper correction for stocks. I'm not going to call that. I don't think we're necessarily going to see stocks fall off the side of a planet yet, but the risk is certainly there if we make a move sub 2056 today. So keep your eye on that major key support here in stocks for the S&P. And again, those levels are all highlighted for you on the radar chart for today. Any questions on broader risk? It's going to be very interesting to see how markets react to this Greek debacle. We've heard about it for months and months and months. And we'll see if it triggers this near-term correction. Okay, so into the intraday charts we go. First things first, we'll take a look at the euro dollar. Raj says, how would you look to go short? What do you use, RSI and resistance? Yeah, so Raj, price action is our biggest indicator, right? That's what we're going to use to be getting in and out of these positions. And when we're looking for resistance or we're looking for support, yeah, what actually puts you into that trade is going to be the short 5-minute trigger, Raj. Okay, so we're going to be looking for resistance triggers, support triggers, opening range breaks, and when these happen at key support or resistance, that's our trigger to jump in. So let's go through the euro here, Raj, and I'm going to walk you through and let me know if you have any specific questions, all right? So euro dollar on the daily, this is what we were looking at. We did come into a nice median line resistance off the highs for the month with that rally that we made yesterday. We rallied as high as 112.71. Okay, here's the daily chart. And it hasn't changed our bias. One thing I want to say about the euro is this, guys. You know, we have to recognize when the behavior of the trend is giving us conviction. And one thing that you want to note is this. First of all, I noted this yesterday in the piece. The range that we had on the euro yesterday was 2.88%. That's the largest range that we saw since the March 18th Fed decision, which posted a range of 4.1%. Why is that important? It's just added facts to give you help on the conviction. But if we go back and look at what happened on March 18th, that was pretty much the birth, as it were, for lack of better words, of this reversal trend to the upside, right? We did have 2 days of rallying off that before that day, but remember, we were coming into a multi-year trendline support extending off the 2008 and 2010 lows. Okay, and that came right into the low that caught the drop here in the euro. Then on the rally, obviously the 18th charged a massive rally of a 4+% on the day. And essentially, that low held. Yeah, you got a little dribble here to test trendline support again, but broadly speaking, that low held. And here we are, 1,000 pips off the low into the highs here, and then a move off again, a gap lower on some quote-unquote news, and the euro posts another 2.88% rally. Okay, so forget the headlines. Let's focus on what price action is saying, and the behavior here is one of a trend that is constructive. Could be wrong. It could be reversing and could be dropping right below 110.50. That's our invalidation level. But as long as that holds, we have to respect what price action is doing. All right. So again, unless something comes out really dramatic or it's a very disorderly decoupling for Greece, um, all things held constant, still looks pretty constructive. You're trading at resistance. Here's what the near-term charts look like for euro. That gap could have been the only way for them to whip out the longs. Who knows? Possibly, possibly. But again, I'm not going to make that assumption. At the end of the day, we went into the gap, we filled the gap, and we broke higher. A lot of times, JT, the way I like to trade these gaps is I will use the gap range in and of itself as an opening range. Okay, so if we were to do that objectively, then this is the opening range high. We broke through the opening range high. We tested the opening range high support, and it held. Which is why if you look at yesterday's piece, we're constructive above 1050. Okay, so 1150. While above 1150, we'll continue to look for long triggers. Even if it breaks down below this, I'm not interested in doing anything here. 1050 is going to be the invalidation level. So if this breaks the lows, I'll sit on my hands. We'll sit on the sidelines here in this region. A break below 1050 really looks for the continuation of the broader downtrend. But as long as we hold this, the risk is to the upside. Okay, this is your major key resistance near term. Again, we ran into this last night. This is basically the 618 off the highs. Also, trendline resistance or the upper median line parallel for the formation that we're currently in. And that's going to be the breakout play that opens up, probably a rally here into July trade if we make it through. So nothing's really changed here on the euro despite all the volatility, despite the massive range that we put in. In fact, it keeps us a little bit more constructive. If you look at this a little bit more on an objective basis, you can see that the upper median line parallel, or the lower median line parallel, of this larger formation off the lows, break below or gap below, the gap fill was right there. Here we are testing it as support. And that lower median line parallel last night came in right at that 1150 mark. So, looking at the RSI signature on this, still looks pretty constructive. You came from oversold condition, you broke into overbought condition, now you're looking for support at 40. There it is. All right, there it is. So a break below 40 and a break back below a 10 or 1150 here will invalidate the long trend. Will be neutral at that point. And like I said, a break sub 1050 really focuses down to the downside again. So we'll look for long triggers while above this region. Here's what the 5-minute chart looks like on the euro dollar at this point. You don't really have too many compelling triggers to work with, except the one off the high here. I thought I had this on earlier. Okay. And we'll see if that topside break gives out as we open up U.S. trade. But don't also just give you a point of caution, guys. A lot of the range extremes have been happening into the close of Europe. So I do want to keep that in mind. So, for example, here's the opening range for the U.S. trade yesterday. It didn't give out till 10 o'clock. So that's an hour and a half into U.S. trade. You got that opening range break on the pullback. Stop against the low here, looking for about 37 pips on the long. Would have played out, obviously. Yesterday's rally was very intense. But here's the European close. Okay, you get that pullback, and then a lot of times this secondary move, whether it's going to pair the U.S. range or move higher, will come right after that European close. So keep that in mind. If you missed the initial entries on the U.S. opening range, the close of Europe has been offering some nice opportunities. Any questions on the euro dollar? So Raj, as far as the RSI is concerned, right? This is a scenario where the trade is coming into support. There's your RSI trigger. Not every trigger can be taken. Okay, if the stop isn't allowing us to put in that 37 pip stop, from here it would need to be somewhere in the range of 111.70. You've got to put your stop below the opening range lows. Pretty extreme right now. So I wouldn't take a trade per se like this. I'd be waiting for a little bit more of a compelling pullback, a little bit better of a risk to reward ratio before taking the long there. But these are the triggers that we're working with. These triggers, in and of themselves, Raj, don't mean anything. It has to be with a combination of price action or an accompanying a price action break of resistance, support, trend line, longer term moving averages as some examples. Does that make sense, Raj? We'll go over some more setups here, but let me know if you have any specific questions. He says an emphatic yep. All right, awesome. Awesome. I think it'll start to click once we get through a couple more setups here. Any questions on the euro? Constructive above 1150, 1050 is the invalidation. Near-term resistance, you're looking right up here at 112.50. Break there, you're looking for that 1330, 1345 level. All those levels are highlighted for you on yesterday's intraday update. Okay, so next up on tap is dollar yen. It's a little bit of a slow burner here today, but I still like the broader setup, and we're looking lower. So dollar yen looked like this yesterday. You know, obviously we made that gap. We hadn't filled the gap per se, but remember, guys, these gaps on the Sunday open, there's nothing that necessitates that the gap needs to be filled. And especially on a pair like dollar yen, it can take a week, a month before we fill that gap. So I don't want to. Let me take a step back. The fill of the gap shouldn't be the major play here, right? Nothing's changed. We're still holding below the median line off the highs. The only thing that we've been waiting for is this key support break at 122.36, 122.33. Here's what the scalp looked like last night. We were sitting right on that level. Again, there's the median line structure off the high. Caught that spike high last week with precision. Again, on Friday, just about to touch it before we reversed again. Or, again, the gap, rather. And the gap found support right at that region. Remember, my favorite setup, so 618 extension off the high, 50% retracement off the low, really nice confluence region. And that's the region in focus. Here's the 5-minute look like, or here's what the 30-minute looked like yesterday. Momentum signature still remains pretty bearish, sub 50, sub 50, sub 50. Here's what the intraday looks like now. Okay, so as far as the support targets are concerned, obviously the 122 handle is going to be just the March highs. I had that labeled for you right here. If we scroll back long enough, there's the March spike high. That triggered an overnight trade. I didn't take a position on that. I took a position on this new rally here back into the median line. And on a 5-minute chart, a little bit delayed on the entry for me, but on the 5-minute chart, you had some divergence into the highs, price action making a new high, the oscillator making a lower high, okay, and then a trigger break. So again, a little bit delayed for me on that break, but we're looking lower broadly against the highs here, looking for about 23 pips per scalp. 122 would be your first target, and then the major key support near term is going to be that 121.57 into 121.50. And basically, you're looking at the lower median line parallel for the current operative formation and a key 618 retracement off the highs. So no change there. Still looking for the dollar cat to or the dollar yen rather to give us that downside move. I'm going to segue real quick, guys, just for a second, and go into the dollar index. It's always good to have a broader picture of what the greenback is doing in and of itself. So again, Dow Jones FXCM dollar index at its inception equally weighted euro, Aussie, sterling, yen, and yesterday's gap, which took us above the invalidation level. Remember, 11,887, 11,880. We've been talking about it for months. The upper median line parallel, the 100-day moving average, you name it, it was stacked up in this region. We gapped above it. Look what we did yesterday. Okay, not only did we cover the entire Friday range, but we even closed right at Friday's close low. So again, not a constructive feature, right? And again, the same exact bias stands now. Below 11,880, 887, we got to be looking lower in the dollar index. Plain and simple. Plain and simple. And a good way of gauging, guys, you know, sometimes you'll hear all these things on Twitter and on TV that'll sort of mess up your bias, right? You'll start to second guess yourself. Oh, it's a risk-off environment. Stocks are plummeting. Shouldn't the dollar be rallying? Doesn't look like that happened yesterday. And in fact, yesterday saw a pretty huge divergence. Here's the SPX next to the dollar index, both moving down together. Which is why we need to, be mindful. There's a difference between risk on and risk off and risk aversion. Risk aversion is what you're seeing here. People just don't want risk, right? Safe haven flows or risk off flows typically means you'll see those haven assets start to pop up, meaning we should have seen gold show a pretty strong reaction. We should have seen the dollar show a pretty strong reaction, but we didn't. In fact, if you look at the gold trade, it did post a pretty decent rally, but before the day was over, the thing came back. back below trendline resistance, back below the former lower median line parallel. Perfect tag. And we are trading to the downside again. So this risk on, risk off environment that people are throwing around so loosely is not the environment we're in. We may be in a risk averse environment, but that doesn't necessarily mean it's going to be support for the dollar. So I just wanted to stress that real quick and kind of put things in perspective so we have a better understanding of what's going on. So if the opening range is not broken, you will not think about entering long. Raj, are you talking about dollar yen still? Or which one were you talking about, Raj? I think I might have missed that pair, or I'm not sure which one you were talking about. But let me take a step back. The opening range is not a strategy in and of itself. I have a bias, and guys, we need to have a bias on every pair, irrespective, okay, of these triggers. Now, if I'm bearish on the pair, then I'm more inclined to look for support triggers. I'm more inclined to wait for an opening range break to the downside and so forth, but it's not required, right? If you're at resistance, you have a clear momentum trigger, or price action is speaking with a very strong reversal of something, that's all I need. The opening ranges, the RSI triggers, these types of things, they're added conviction that help you get a little bit more. Let me say this, when they all line up, you're a little bit more aggressive on the trade, right? Your leverage a little bit higher, the position's a little bit higher, and so forth. So if we look at the, so Raj, let me know if that helps. And again, feel free to clarify those questions. If we look again at the 30-minute for the dollar index, this was published on Sunday's, excuse me, intraday update. Here's what the 30-minute looks like. We've been following this since last week, guys. Really, really nice moves. The levels have been certainly very, very clear. Yesterday, you got a poke here right into the close of trade back below support, but Asia opened right above it. So that's been the opening range low for all of Asia, all of Europe, and here we are trying to make the break. Again, near-term support, 11,840, 11,844, confluence region. We worked with this region a couple of times over the last month. And a downside break here, you're looking for a drop into this key support. And again, that'll be a 618 retracement off the highs. Nice pivot in price and the median line. JT says, is there a valid trigger on the 5-minute for dollar yen? Nice. I did the same thing. Okay, so I'm assuming you're looking at that same trigger, JT? Yeah, it looks pretty good. Says that gap could have been the only way for them to whip out the longs. Who knows? I think I read that comment earlier. For the dollar yen. Yeah, well, we'll find out here today. Again, I try not to think too deep into it, JT. Let price action guide your decision making. Our thoughts, our feelings, what could have happened, what could be underway, in my humble opinion, is just kind of noise, right? So take it with a grain of salt. But looking to see if we can confirm this break here in U.S. trade for the dollar index. All right. Any questions on the dollar yen beyond that? And again, that median line structure off the highs still in play. Looks very clean. Looks very clean. Here's a stretch high that it caught. Here's a stretch high that it caught. Break and a run. Break and a run. So these levels, I like to call them sometimes low tolerance levels. So when the market comes into this region, there's very low tolerance for it to kind of stick around there, right? If you look at all the reactions off it, they've been pretty radical. Either the break gives us a major run or the rebound gives us a really strong reversal. So here we are again. We've been sort of straddling it. Another tag. Need to get below this 122.30 level to get this thing going in U.S. trade. Any questions on dollar yen? And again, to the downside, 2150. It is highlighted here. 2150 is going to be a pretty big region. Pretty big region. And again, this is what it is. 618 off the highs, off the low rather, from May. And then this, what you see here in gray, is actually the December highs, and that's 2183. So a nice confluence region there of support. Dollar yen, what was your thoughts what was your thought to jump in before the U.S. cash market open? It's just purely based on a trigger, Eileen. It's purely based on a trigger, and on this one, it's the risk to reward. So the stop is right against the high. I'm risking 15 pips. Okay, I'm looking for, what is it, 27 on the dollar yen right now? 23. So you're looking for 23 pips on this one, Eileen, right? So the stop is well within our range that we're looking to trade. There's divergence into the highs and a trigger break. I say it here in the webinars all the time, guys. 9 times out of 10, divergence into a trigger break I will be taking. Now, the only thing I would have probably cautioned you if someone would have came in this webinar and said, hey, Mike, I like a dollar yen short right here. The only thing I would have cautioned you to is, hey, check it. You're testing support, right? You're right at support. So it might be prudent for you to wait for the support break, wait for the rebound, then take the stop against the highs. But we already made it through this support last night. Nice pivot. It's been acting as sort of a nice pivot in near-term price. So I'm willing, with a stop like that, 15 pips, 16 pips, I'm willing to take a stab at it. Does that make sense, Eileen? Yeah, GS, you're absolutely right. That's what I would have been telling you guys. You're taking a short right above major support. But again, the major support has already seen a break and momentum is turning. You have a divergent trigger break. Our broader bias for the dollar yen is to the downside. So there was enough there for me at least to press it. Again, guys, on some of these trades, it's just going to have to be guts with your conviction on your analysis at the end of the day. It was a perfect tag of that trend line resistance or the median line here again, and we'll see if it pans out. If it doesn't, it doesn't. 15 pips, we'll look somewhere else if it doesn't work. Does that make sense, guys? Eileen, I know that you're trying to nail down the triggers and the entries, so I want to make sure I'm answering those questions. Let me know, if there's anything I can help you with on that front. Title is saying RSI trendline from yesterday's New York session high. What pair is that on? Tuttle. Missed the previous call. Okay. Eileen says entries. Yes, my weak area, but so glad for your class. I'm learning. All right. Cheers, Eileen. Feel free as always. GS says, okay, you just answered my my question in the commentary to others. Okay, no worries. JT, I will definitely take a look at the Kiwi in just a moment. Okay. So we'll let this simmer here again. We're looking for about 23 pips. We're up about 7, or 9 at this point. So we'll see if we can get that move. The last trade that was on the intraday update from last night was sterling yen. Listen, a wider range scalp. Be mindful when the quarter ATR is wider like that. If you're newer to the strategy or just getting your feet wet in intraday trading, I would caution you against pairs that have larger ATRs. It's just the implications when you're wrong are a little bit larger. So until you get a grasp of things, just keep that in mind. We always want to be mindful of what the range is putting in. But sterling yen, very compelling case here. Very compelling case here. So here's the daily chart. We broke below this sliding parallel from the operative trade that we were in almost 3 entire months or 2.5 months here. And certainly we broke that support. It acted as resistance, a sliding parallel with that same slope off of last month's or this month's low. Saw this support break back on the 24th, and we closed the week below this line. Okay, the gap took us below the R1, which I don't really stress too much, but again, it's next to those lows. And the 2008 swing low is dead on with the 50% retracement for the monthly range. And that's sort of the support we've been looking at near term. Okay, so off of this high, what does that structure look like? It's super clean, guys. Super clean. Do you see this? I had it as a dashed line last week, if you guys remember. We put it on in the webinar here together because we weren't really sure. It was too early to tell if it was really an operative play or if it was the correct slope. But heading into Friday, it's exactly where you capped out the advance. Into the gap open for the week. That's exactly where we found support. And then into the rebound off that. Wait a minute. And there's the median line catching resistance. So broadly looking lower while we are within this structure. Key support is at 191.57, 191.36, a little bit larger of a range, but again, so is the ATR. And we're looking to sell rallies. We're looking for short triggers near term, and this goes along with the yen strength that we're expecting in general. So look for near-term resistance. A possible long entry would be right here at 193.46. The invalidation level for the downside bias is up here at 194.60. So just like the euro, if we come into this region, we find some decent short triggers, momentum holding at 40. I think this would be a nice entry against the highs. If this breaks, wouldn't necessarily be looking to play the long side. I'd be looking again for resistance right near that 194.60 level, the upper median line parallel. And again, this would be the invalidation for the downside bias on the scalp basis. If we make it through that, it's a very strong uptrend. And again, my trade of the year. So I do think this sees a lot more upside before all is said and done. Near term, look for the structure to offer some guidance here with resistance highlighted at 193.50, let's call it. It's the 47 level. It's the low that we made last week. All right, so still looking to sell rallies in sterling yen to get a nice entry for the short side of the trade. Heading deeper into the week here. I wouldn't be surprised if we do pop into 94.60 just because the gap has still a wider range that hasn't been filled. But again, that's not justification to take a position. Any questions on sterling yen before we move on? I know that Jamie, I was talking with him yesterday on the swing side of things. You guys are also looking at an entry near 194.50, which is just above this region. Just above this region. So, and in fact, if you take a retracement, I'm just eyeing this out, by the way, but I think it's going to turn out to be a perfect 50. Close enough. Okay, so the 618 comes in at 93.70. The 50 comes in at 93.30. Same exact region, basically. Actually, if we stretch this into the highs for the month, we'll probably get a better tag there. There's the 50. So just some reference there, but no change on that front. Raj says, yes, Jamie is looking to short. Your eyes are like computer. All right, so if there are no more questions on sterling yen, we will jump into your questions and some of the other various pairs that have been in focus. We went over both the charts on the intraday radar, SPX, dollar CAD. Let's check on dollar CAD real quick. All right, we're getting there. Again, 2450 is what we're focused on. Moving right along, Kiwi Dollar. So here's what we looked at Kiwi as we started the week. And if you recall, last week we were on the long side of Kiwi from a scalp basis. We closed out some really nice positions, 50 pips and more on the final stretch there. But that rally closed the week, or essentially opened this week, right at resistance again. Okay, and it's basically this region here, 69 to 68.75. We highlighted this months ago on the initial break as we were heading into that March high and the trendline resistance off the yearly highs. It was a huge region, 1618 off the high, a longer 100% extension, a 50% retracement from the advance off the lows, much longer term, and we opened the week testing the median line, which came through that whole region of resistance. Here's what the intraday looked like. So you had that median line coming in. Again, that major key region into 69 as resistance. A breakout was the play here. If we had opened the week and we had seen a topside break, we'd be looking for 69.40. We'd be looking for the 70 handle. Here's what Kiwi did subsequently. All right, so in fact, we held right into that in the close of the week. We pulled right off. And here we are again. Here was the Monday's trade, again testing the median line as key resistance, right at the underbelly. So the play here was a topside break to play into the resistance level off the highs. Obviously, we didn't get it. Near-term support doesn't come into the trend line. That's not a proper trend line. Let me let this snap. Hold on one moment. There we go. So you're basically looking for the median line parallel, the lower median line parallel to catch the lows here, and that comes in just above the S2, somewhere around 67.25. Here's what the scalp looks like for the Kiwi. All right. So that same formation is still in play right off the highs, same one that you're seeing on the daily chart. Super clean, right? And there's that median line once again rejecting the rally. So look, from a scalp basis, I typically don't like to play pairs that are at extremes. Why? Because a lot of the levels that we look to target on the intraday strategy do use previous price action, previous highs and lows, opens, close for the month, weekly opening ranges. Now that you go into, basically extreme territory, it's hard to ascertain any type of near-term targets to the downside. So on the Kiwi Dollar, Tuttle, and who else was asking about that? For the Kiwi itself, it's not really going to be my favorite play at this point from a scalping standpoint. If you want to take a longer term view on this and you're trying to hold it for a little bit more of a medium term position, yeah, short seems to be the way to go. Is this positioning where I have a proper risk to reward ratio to try to play that? No. Do I have any near term targets to the downside beyond that trend line support, the lower median line parallel? No. Right? So that's kind of my problem with it, Tuttle. I want to see what triggers you were talking about, though. It says I made a comment about the Kiwi. There was just an RSI break at the 67.63 opening range top. Might get a pullback to the session range top. I see what you're talking about. Looking too closely on this one, in my opinion, I think, Tuttle. First, I want to see if that offered support. Nope. This is the trend line that, or the trigger that Tuttle's talking about, and you're absolutely right. That is a topside trigger break again. You did see a break of the initial opening range. That's tight. That's tight to use the opening range for New York. Let me see what you're looking at in the 5-minute. $67.63. Yeah, so the New York opening range you were looking at, again, just the first 10 minutes or first 15 minutes is going to be really tight, Tuttle, to actually validate that as an opening range break. Look, on a 5-minute chart, if you're playing this, sure, a stop against the lows with the recovery makes sense. You'd be looking initially for a target back at 67.90, in my humble opinion. And it might work out well, but remember the pivot that we made, right? So this is the monthly low, or this is the opening range. It is the monthly low and the weekly opening range low. So this might offer some resistance here heading into 67.90 or the 68 handle, essentially. Just remember one thing, Tuttle. Even if you get those 5-minute triggers, right? We still want to be mindful of the broader directional bias, right? And if this is a break of the major key support range that we were talking about, now that we've settled below it, you're kind of trying to fight an uphill battle. So I don't know. I've just been scared off of the Kiwi lately, Tuttle. You might still get the upside play. I would just tack on a quick retracement here off the highs and get some guidance here on the near term levels. Something like this. You can see that we're testing that 236 right now. But that's what I'd be looking at. And on the intraday chart, actually, 5-minute, the one thing that you do have going for you as well, divergence into the low, followed by a trigger break. 9 times out of 10, we'll take that position. So as far as the merits of the trigger, Tuttle, I'm with you 100%. Beautiful. But near term, from a scalp basis, I'd get a little concerned if we hold below this. I'd want to see us pop back above this region. And near term, we're going to drop that invalidation level for the shorts to here. It's really the level that you need to clear to get the justification or the conviction, in my opinion, to start favoring the long side. Tuttle says, yes, divergence plus the trigger break at the session top and Jamie's trendline confluence tweet. I might have missed that tweet that Jamie put out. Let me see what he's looking at here. Okay. In any event, I don't want to waste too much time. Here it is. So here's what Jamie was looking at. And he's using the retracement on the daily chart. Okay, so yeah, I see exactly what he's looking at. Just keep in mind one thing. From an intraday standpoint still, Tuttle, we play it much tighter than Jamie does. So for these types of broader daily charts to materialize, you kind of want to let the trade pan out a little bit, give you some conviction that we're seeing those lows actually start to be putting in. But listen, I can't hate on the trigger. It's perfect. The only concern I have, Tuttle, on a trade like that is the stop essentially needs to be against the lows, right? And that makes it very, very tight. But the trigger was definitely there, especially on that 5 minute. That is a beautiful trigger. Steven says, I was trying to play Kiwi long 2 months ago. After getting stopped out 5 to 6 times, I stopped fighting. Yeah, so if you guys remember, Swing Trades had a trouble with this one too. Last week, we actually did have the long side in play as we were heading into that 69 level, like I said. Then momentum broke down. There was a trigger. It tested as resistance and held. And right into the end of the week, the thing kind of just tapered off. So you guys remember that webinar. We discussed those entries at length there on the long side. But I hear you. A lot of people have been trying to call the low. And that's why, guys, it's never an advisable thing. And that's one thing in trading that I learned time and time and time again. Trying to call the lows is such a difficult task. For me, from an intraday strategy, yeah, the hurt is minimal, right? Because we're taking 15, 20 pip stops. Not a big deal. But do that a couple of times, like Steven's saying, and it could really be frustrating. So I hear you, Stephen, as far as trying to call the low on this. And even though we're expecting Kiwi or dollar weakness, don't forget that the Kiwi is not represented in the dollar index. Okay, the dollar index is just the euro, Aussie, sterling, and yen. So we could easily see dollar index continue to come off and Kiwi dollar move sideways to lower. So keep that in mind. A lot of interest on the Kiwi here, guys. Any other questions on this? Tuttle, I'm gonna continue to give you props on that trigger, man. Right on. You're a pro with it now. He says, yes, you were answering my questions without me asking. Thank you, Tuttle. You're more than welcome, my friend. It's a beautiful slope, though, says Steven. Agreed. It's not so often, guys, that you get a slope that stays for multiple weeks, multiple months within the confines of a median line structure like this. Absolutely. Tuttle and I accidentally caught the low, says JT. More power to you, my friends. I hope this gets through 67.80 for you. That would be a beautiful trade. JT says that's the only way to do it. All right. Raj says, Mike, did you take a look at sterling dollar trade yesterday Jamie put on? That was so annoying, so close to the target and ended up break even. Guys, that's going to happen. I don't want you to get so down on it if it happens. Break even stop just gives you the opportunity. If the conviction is still there for the trade, you can jump right back in, right? But for the pound, we went over this yesterday in the webinar on daily effects. Yeah, personally, I'm not really comfortable with the positioning on it. I'd rather play some of the pound crosses, which is why yesterday's intraday setup had that pound yen position. I think that's a little bit more of a pressing trade. And this is why. We went over this yesterday. Like I said, you broke that upper or the lower median line parallel for this formation off the monthly lows. Very, very clean, specifically on a close basis. Real clean, right? Real clean. And we drifted out of it last month and got no downside. Or last week and got no downside. If this was going to be a legit break, okay, of a structure that's held for the entire month, you would expect the low, or the break rather, to give you a drop or a reaction. Remember the low tolerance trend lines, right? Didn't really get that there. You broke it, yay, tested its resistance, that held. Typically, it'd be looking lower. We tried to push lower again yesterday. Okay, the close that we made here on the 24th, continuing to offer some support. Resistance at the May high day close. Still been a decent pivot in price, right? So I'm on the same page as Jamie is where I think the directional bias is. I love the sterling long in general on a longer term trade. Is it ready right now necessarily to get that topside pop? I don't know from a near term prospect, just because price action to start the week has been pretty wicked, right? So here's the formation that we were both looking at. Again, messy on the breaks, messy on the median line. And it's just not my cup of tea. It's just not my cup of tea. And specifically, when you look at a momentum signature that does this for any prolonged period, especially through an entire session, which is basically Asia Pac, the entire session momentum was just flatlining at 50. Even if this was happening near 40 or 60, it'd give us something. But at 50 means no conviction from the momentum side, guys. Even though last night you actually got some pretty decent data out of the UK. So I don't really necessarily have a setup per se, guys. If this thing breaks through the opening range high for the week, sure, I would wait for a 57.95 break here. That's a basic 50% retracement off the high. That level coincides pretty closely here with the median line over the next couple of hours. That would be the validation for the reversal higher. Even on this formation that we were following last week, which looked like it was beautiful, okay, look how many tags you got that lower median line parallel. And even on the break, a sliding parallel of the same slope offered some guidance, right? So on the topside breach, you'd expect to see a run. Not really getting it. So I don't know, man. I mean, this thing could go sideways to lower for a couple of days before you start to make a move, Raj. And, that's why I haven't highlighted it on the intraday side of things, at least. I still think you look higher, broadly speaking. But, you can see a chop fest here for the next couple of days before this actually starts to make a move. Does that make sense, Raj, as far as the sterlings go? I wish I had more, conviction on the bias there, but for me, it's still on the near-term structure. It still doesn't have that clarity that I like to jump into position. Raj says, Mike, just a general question. Do you guys take trades other than the ones you post out on SB Trade members? I'm just wondering how you guys make money from limited trades. Raj, 120%, my friend. I definitely take positions outside just what I put on SB. What I put on SB, what we put on SB, me and Jamie, those are our favorite positions. Those are the clearest positions. Those are the ones that give you the best risk reward. I mean, I can't speak for Jamie per se, but for me personally, Raj, yeah, I mean, I'll take setups across the spectrum. It's just my strategy is so near term. By the time I get into the position, make a tweet about it, it's just going to encourage a lot of chasing from the client base. So I'm very mindful of that, guys, especially with the near term strategy. There are services out there that, they claim that they're scalping or near term trading, and the way that the signals go out and the way that the trades are presented, it just encourages a lot of chasing. And that's the last thing I want to do with you guys. I want to make sure that we're understanding the process. And if you trust in the process, it works. So Raj, I hope that offers some clarity on that front. A lot of the trades that I'm taking on the intraday are going to always be based on levels that are highlighted on the intraday charts, for sure. Does that answer your question, Raj? Mark says, Aussie CAD stopped out but short again. Raj says, thanks, you're more than welcome, man. Mark says, stopped out short at 95, 95, and 96 stop loss. Let's look at Aussie CAD. I was messing around with that yesterday, just on account of the resist. Okay, so we actually broke through it. It's a longer term trend line that dates back to 2010 lows, and it's not the cleanest. I just want to show it to you real quick. So this low off 2010, the low off 2013, and the low off 2014, all three trend lines kind of gave us this slope here. You can see that here in April, really messy. Here in this month, again, real chop fest. Yesterday we closed right at that after gapping into a major key support and here we are moving through last week's high. Watch for near-term resistance from the trend line off the highs there. I'm not quite certain why that's drawn like that. There we go. And that goes right into the 100-day moving average just above. So basically looking at 64 or 96.40, excuse me, 96.20, this region right here. So, Mark, I guess on that trade, you need to be mindful of the economic docket, man. So we had the GDP release, right, which was weaker than expected, really causing some CAD weakness, and that's what you're seeing relate here in Aussie CAD. Okay. Yeah, I mean, 92.85 was pretty. 93.85 was pretty big. So, guys, this is a 100% extension from the highs of the year. Okay, and that's almost exactly where we gapped into and rallied through. Let's look what the near-term chart says. Oops. Aussie CAD, Aussie CAD. Oh, it's on the same charting. 30-minute. There we go. Okay, so you can see it's been a couple of weeks since I actually watched this one, so give me 1 sec, guys. Let's see if there's any. That's sort of the median line structure I'd probably be working with right now. Obviously, the highs for the opening range for the week got a nice bounce there. The lows for that we just made got a nice bounce there. So we've been watching that 94.86 level already. Like this is near-term support. Momentum, pretty constructive. Break into overbought. Support at 50. Break back into overbought, or at least above the 60 range. Okay, this is a longer dated retracement. I don't want to mess with that one, so I'm just going to watch this. $618 $9,600 near-term resistance. Don't want to stress this 50 anymore. All right, so that's the levels I'd be looking at near term for Aussie CAD, guys. Near-term resistance, like I said, 96. You could get another pop into the median line resistance. That takes these highs like 96.25. But broadly speaking, this is where you'd look for initial resistance, and they'd look for reentry somewhere again near that median line. A break above, you're looking for 96.65, but really 97 is going to be the larger play for resistance here on the upside. And actually, high in price. That looked like a beautiful trigger that just gave out. No divergence, but a nice trigger. And again, stop would have been pretty decent there. So I hope that helps, Mark. He says, okay, I took a screenshot. Thanks. You're more than welcome. Feel free to, guys. Again, if you're newer to the webinar, guys, or this is your first time in the intraday sessions, or the midweek sessions for that matter, there's a camera in the top right-hand corner, picture of a camera icon there in the GoToWebinar software. You can click on that and always take a freeze frame or a screenshot of any of the charts that we review on the webinar. So, feel free to use that for your benefit so you can always refer to them. Other than that, obviously, they're all archived on the website. Mark Eileen says, what do you think of the new FXCM high-frequency trading tool page? Eileen, it's interesting because they actually involved me a lot in the production of that, and they were asking for my feedback as well. Listen, I think the idea is novel. I think you can get a lot of benefit out of it when you're in a position. Yes, you took the words out of my mouth, Eileen. It encourages chasing, not even maybe, 100%. Okay. and that's my issue with it. That's why, for me, when they roll it out eventually, my biggest recommendation was to really make sure that there's some sort of stop um, strategy included with it. Because if the market's telling you, hey, plus 10 pips or plus 3 pips, plus 2 pips, that doesn't even cover your commission. So I don't really know how you can use it as a standalone strategy. But Eileen, when you're in a position, certainly keeping it on the side there, telling you what the expectation is over the next couple of minutes may be useful, sure. Um, I wouldn't use it as a signal service for entry on any position by any means. Does that make sense? Eileen says, and me as a chase addict need to be careful. Yeah. So word of caution's been sent out, Eileen. Raj says, Mike, where's the next level of resistance zone dollar CAD? It broke the monthly opening easily. Okay, so we're pushing through that resistance, huh? $125. $125. I do want to say this. Who is this for? Raj. I'm looking for a possible hold here. Okay, if that does hold, it might be a decent entry actually for the short side. I don't know. On a trade like this, where before the U.S. cash market opened, it's already made a 100 pip stretch. Obviously, you can't use the opening range strategy for this, but I'll be looking for short triggers into that region. So watch the 5. If this plows through, then you're looking at 125. You're looking at the 2015 high day close, which is 2560. So those levels are pretty clear, but I'm on guard here as you head into that 2460 region. All right, Raj? Keep that in mind. Okay, so guys, if there are no other questions, if you do have any other questions, please feel free to throw them on the message board. Raj, you're more than welcome. Same to you, Eileen. Quick look at the euro yen, just because we talked about this yesterday. The gap low going right into the median line, which has been such a ridiculous pivot in this pair since the lows that you made for January, catching the highs on that stretch. Really low tolerance break, instant support, instant support. Now testing near-term resistance, or we tried to close above near-term resistance yesterday. Couldn't make it through. So this is still the region in focus. Um, and because we're obviously long the yen, I'm not really interested in necessarily trying to play this on the opposite side here. But I would be mindful of that 3750 barrier to the upside. If that breaks, you're likely to see this thing go for another test of major key resistance, which comes in right in this region here. And here's a nice resistance trigger on the daily as well. 3-point trigger. Looks good. So that's another one that might be on the menu here over the next couple of days. We'll see if we can get any clarity on that. On the near term, since the weekly open, you gapped. You pretty much filled the gap. Missed it by a couple of pips, but again, markets aren't static, so we're not going to hang on that. Let's make these trend lines snap. There we go. So again, this is the region we were looking at yesterday in the webinar. You guys remember this? For the long side of the euro yen, where we'd be looking to find some resistance, or what the target was. Once we broke above that, this shifts our bias to the upside. That quickly ran into Friday's low, rejected, and now we're kind of straddling it. So I'd look for a little bit more clarity here on euro yen, but generally speaking, being short dollar yen, being long euro dollar, is kind of, you're likely to see this thing chop sideways to lower over the next couple of hours, days. All right, so we'll wrap it up there. Guys, we're going to be back on tomorrow morning, 8:30 Eastern, same time, to go over more of these setups and hopefully get a little bit more progression in this. Obviously, non-farm payrolls will be on Thursday, so we'll give a nice wrap-up, and we will open the room for non-farm payrolls, guys, for a brief session. It's the, let me take a step back real quick. Today's the last day of June trade, so as you head into the U.S. close, you get a lot of rebalancing, you get a lot of flushing out, and I would just use caution. Don't read too much into price action as you head into today's close for the U.S. trade session. Heading into the July open, obviously you're going to have really thin conditions here in the United States because U.S. markets will be closed on Friday in observance of 4th of July, which actually falls on a Saturday this year. So heading into Thursday, again, it'll be the second trading day of the month, really thin liquidity. We'll have to reassess and make sure that we're watching price action a little bit more um, on a nimble approach, let's say that. So till then, best of luck trading, guys. Have a great day, and I will see you bright and early tomorrow morning. Cheers.